Hi everyone, good morning and welcome back to Grade B. So today we'll be discussing about the financial statements part 2, right? In the first part we have discussed about profit and loss account, and in today's lecture we'll be discussing about the balance sheet, right? It will be a simple discussion on the balance sheet, like what are the contents of the balance sheet, different terminologies that has been used in the balance sheet and like that. So before we start with the balance sheet, there is one more term that I would like to cover, that is called as the operating profit. So in my last lecture, we have already covered gross profit, right? We have already covered net profit. What is the meaning of gross profit, meaning of net profit, that we have already covered, and today we'll be talking about the operating profit. And after the discussion I will also be talking about the differences between gross profit, net profit and the your operating profit, that is EBIT. So let's see what is EBIT. EBIT full form means it is earnings before interest and tax. E means earning, also called as profit before interest and tax. Correct. So operating profit, it is a profit earned through the normal operations and activities of the business. What is the meaning of normal operations and activities? So I guess I have told this so many number of times that normal activities means the objective for which your business is established, right? I repeat, the objective for which your business is established. So suppose if you are into the manufacturing of medicines, then whatever amount you are earning from the business of medicines, that will be called as your operating activity. If you are into manufacturing of any other commodity, or let's say if you are in the trading of white goods, white good means your AC, fridge, etc, etc. So if you are in this kind of trading, so any amount that you will be earning from your trading is your operating activity. ठीक है? Now with that particular backdrop, let's take one more concept over here. So many of the times the types of activities they get asked. See, formula, not directly they will not ask you the formula, but the concept can be asked, right? So what my focus is that whatever they might ask you out of this operating profit, you should be aware of. So when we prepare cash flow statement, there are three kinds of activities we all are aware of. Okay? I will give you the example of how these activities are classified. So number one is your operating activity. Right? Number two is your investing activity. And number three is my financing activity. So other two, I can also say that these are non-operating activities for me. Non-operating activities for me, right, as a business. Now let's take an example. Suppose you are a trader of fridge. You are a trader of fridge. This is your business. So anything like purchasing the fridge and purchasing any kind of services, they will include it into the operating activity, right? For example, purchase of fridge. Obviously, you are not a manufacturer. You might be purchasing fridge from any company like LG, Godrej, etc. and then you are selling it to the customer. So this will be your operating activity. Now, if you have purchased the land or any other like shares of Reliance, अगर आपने लैंड परचेज की है, रिलायंस के शेयर्स परचेज किए हैं, these are your investing activities. These are your investing activities. any amount of like dividend income that I will be receiving on these shares, that will be called as my investing activity, right? ये operating activity नहीं है. Next is financing activity. Financing activity means issue of shares, debentures, taking loans like bank loan, that will be called as your financing activity. Now, for example, if you have paid interest on the bank loan, then what kind of activity it will be? It will be financing activity. ठीक है? So whenever I am saying that find out operating profit or EBIT, earning before interest and taxes. So what I am trying to do is I want to exclude non-operating incomes and expenses. That means all such expenses and incomes which are relating to investing activity and financing activity, I want to reduce them. I want to remove them from the calculation. ठीक है? So this is what we'll be talking about over here. See, so operating profit is the excess of operating revenue over operating expenses. जब भी आप operating profit calculate करने जा रहे हैं, see, when you must have calculated net profit, how net profit is calculated? Gross profit less all expenses, correct? Add all incomes that you might be having. So how do you calculate net profit? Net profit is calculated like gross profit less all expenses, whatever might be their nature, whether you are investing expenses, financing expenses, operating expenses, all expenses are deducted from the net profit. Similarly, all incomes are added, whether these are your operating incomes or non-operating incomes. For example, dividend received. Dividend received is a non-operating income, लेकिन वो यहाँ पे add की गई होगी net profit में, right? So when you are calculating operating profit, जब भी आप operating profit calculate करने आए, तो remember one thing, what you have to do is net profit, remove non-operating expenses. These operating expenses, these non-operating expenses must have been deducted, right? जब आप net profit calculate कर रहे थे, तब आपने ये expenses सारे deduct किए थे, all expenses. So if you want to go back to operating profit, please add these expenses, add back. Whatever has been deducted out of net profit, please add back non-operating expenses. Similarly, when you were calculating net profit, you must have added all incomes, including non-operating incomes. For example, dividend received, right? So in that particular case, in order to calculate operating profit, remove operating incomes, remove non-operating incomes that have been already included in the net profit, right? So is it gross profit plus indirect incomes minus indirect expenses? See, that will be your net profit. ठीक है? Gross profit less indirect expenses plus indirect incomes, that is your gross profit. Now chalo, let's clear this particular confusion once for all. So there are three concepts in the profit. Now you all know them, that is gross profit, net profit and operating profit. Now I am going to draw a particular statement and you will have to see that. So ठीक है, this is your trading and P&L. Here, opening stock, wages, carriage, ठीक है, to gross profit by sales by closing stock. So this is how I calculate my gross profit. ठीक है? This is how I calculate my gross profit. What do I exclude in it? So these are my revenues. Sales is my revenue and this is my expenses, direct expenses I have included. Sorry, I forgot to include purchases. So two purchases will also come over here. This is how I calculate my gross profit. Once gross profit is calculated, it comes like this. Once gross profit is calculated, it is carried down. Now you have to exclude all expenses, right? Now in these all expenses, to find like salary, right, to depreciation, to interest paid, here by dividend received, and after that I am going to calculate my net profit. Now please listen to me very carefully. Okay? While calculating gross profit, I have deducted direct expenses. Okay? While calculating net profit, obviously if these are direct expenses, then these are all what? These are indirect expenses. Anything that is not related directly to the production is indirect for me, correct? So for calculating net profit, this is indirect expenses and this is indirect income. See very carefully. Gross profit plus indirect income less indirect expenses will give you your net profit. Now if someone says to me that please calculate operating profit in it, ठीक है? Operating profit calculate कीजिए इसमें. So what I will do? So I will see that ठीक है, this is all operating. Till this point everything is operating because this is related to production. Everything that is related to production is operating for me. But in this section, just see, salary is operating for me. Yes, in order to operate my business, salary is important, right? This is directly related to the objective for which I am carrying on. But depreciation is also relevant because in the production machinery is being used and hence depreciation is relevant. But this interest paid, this is my financing activity. This is a non-operating expense. Okay? So I will not include it. In net profit, I will add it back. ये already deduct हो चुका होगा. This must have been already deducted. So I will add it back. ठीक है? So non-operating expense will be added back to calculate operating profit. This is also non-operating. Dividend received. This is an investing activity. If you know the concept of cash flow, this is an investing activity. What? Dividend received. So this has already been added to calculate net profit, right? Gross profit plus dividend received less this is equals to net profit. So this was already added. Now I will deduct it from the net profit in order to reach my operating profit. So I hope now the whole confusion is clear to everyone. So this is what the formula of operating profit looks like. This is a back calculation. Okay? This is a back calculation. While calculating net profit, you already have deducted all kinds of expenses. So please add back non-operating expenses because we do not have to deduct them. And while calculating net profit, you must have added all incomes. So please deduct non-operating incomes from the net profit because we do not want to include the non-operating incomes while calculating operating profit. ठीक है? I hope this is clear. Even if suppose anyone who is watching this lecture later on and they are not clear about this particular concept, please do write to me. I will try to take another session on the cash flow concepts. Okay, चलिए ठीक है, fine, it is clear. I am very glad. Now let's see a balance sheet. We will be doing some concepts on the balance sheet. See, most of the times we think that, okay, we know everything on the balance sheet. But many of the times there are few things that are asked in the examination. They are not very difficult, but they are conceptual, right? And for that, you must have read your notes very carefully. Now let's see balance sheet. Okay, the balance sheet is a statement which is prepared for showing the financial position of business. Now in the recently held IFSCA examination, this particular question was asked, that which of the following statement is used for depicting the financial position of the business enterprise, right? Such a easy question. एक लाइन से I guess I have repeated this in my last class as well. So you have to be very careful about each of the terminologies that is being used. Take number one thing. Now it gives the position of assets and liabilities at a given date. At a given date means what? See, balance sheet is prepared. Whenever balance sheet is prepared, it is written like as on 31st March 2023, because that is the closing that we had recently. So this is prepared as on date. किसी एक दिन पे क्या financial results है. Whereas whenever we prepare P&L, we prepare P&L for a year, for a total year. So whenever profit and loss account is prepared, it is written like for the year ended. For the year ended on 31st March 2023. So P&L has been prepared for a total year, whereas the balance sheet is prepared as on any particular date. Okay? So all your assets and liabilities, these are depicted over here. Why it is called a balance sheet? Because statement of balances that have not been transferred to trading and P&L, they are carried forward to the next year. For example, have you ever seen machinery account in the P&L account? No. Normally we do not, until and unless their part of machine has not been sold. ठीक है, जब तक बेचा ना गया हो तब तक P&L account में नहीं जाता. Normally machinery, furnitures and the things like that, we take it to the next year because they are to be used for number of years, right? So all such things which will be used for a number of years, they are not taken to the profit and loss account, they are taken to the balance sheet. Therefore has been said it is called a balance sheet because it is a statement of balances which have not been transferred to the trading and P&L account. Take next is all the accounts of assets, liabilities and capital which are shown in the balance sheet. Accounts of capital and liabilities, they are shown on the left hand side and they are called as liabilities, whereas assets have debit balances and they are shown on the right hand side. Now we never know, a question can be asked that assets have what kind of balance. ठीक है, assets have what kind of balance. So you have to remember that assets always have debit balance. I have always taught you, see, whenever assets increase, we debit it. Whenever assets decrease, we credit it, right? So assets have a debit balance, liabilities and capital, they have a credit balance. Liabilities and capital, they have a credit balance. So that is why this has to be remembered. Now next thing is prescribed form of balance sheet. So for a proprietary and partnership firm, there is no prescribed format. They can prepare as in whatever format they like. Please note it very carefully. For a proprietary firm, sole proprietor and a partnership firm, there is no prescribed format for the balance sheet. But for a company, this question was also asked in the examination, that Schedule 3 Part 1 of Companies Act, it prescribes the format in which assets and liabilities should be shown. So this is for what? Schedule 3 of the Companies Act. आपका Companies Act आपको कहता है कि जब भी आप companies के account prepare करें, so you have to prepare like this. Schedule 3, Part 1, this is the Companies Act. I remember in one of our videos that should be there in the playlist in the YouTube itself. I have discussed the Schedule 3 Part 1 as well as Part 2, which is for P&L. Both the formats, the new formats which are applicable for a company form of organization, I have made a video onto that, and this will be there in the video section. If you'll go, you will find it right in the live section of our YouTube handle. If you'll go and search for that, you will get that, and please watch that particular lecture because that is also crucial if you want to, right? Next is now talking about the balance sheet items. Now some of you who might be from commerce background, they must be aware about it. Many of you would not be from the commerce background, and for them I have included all of these terminologies over here so that there no confusion remains. Number one, we have current assets, right? So current assets are those assets which can be converted into cash within a year. Those assets which will be converted into cash within a year, we call them as current assets. For example, cash in hand, bills receivable, stock of raw material, semi-finished goods, your finished goods, this is your inventory, sundry debtors, means the customers from which you have to collect the cash. Apart from that, short-term investments, prepaid expenses. What is prepaid expenses? Suppose I had to pay the rent for the 1 year, right? I had to pay rent for 1 year, 10,000 each month. So for 1 year, 1,20,000. But I paid 1,40,000, 20,000 in extra. So that is prepaid expenses. Any expense which you have paid more than required, that is your asset now. Why? Because in the coming year 20,000 I will be using, so in this year that is my asset. So prepaid expenses are your assets. Next thing is, जब आप current assets जान गए हैं, so also please know about liquid assets. Liquid assets are those assets, this is not represented in balance sheet, right? Please remember, this is not represented in balance sheet, but this is a vital concept when you will calculate the accounting ratios. So in this particular case, liquid assets are those assets which can be converted into cash within a period of 3 months or 90 days. This is how it is decided. So in this particular case, 3 months, 90 days, these are called as liquid assets. Now please remember, your stock, that means your inventory, is not considered as liquid. Okay? So what are the exclusions? All these current assets, they will be considered as your liquid assets apart from stock of raw material, finished goods, semi-finished goods. They are not considered as liquid assets. At the same time, prepaid expenses are also not considered as liquid assets. So ये दोनों ही liquid assets नहीं है. Apart from that, your cash, short-term investments, as well as your bills receivable, sundry debtors, they are all taken as liquid assets, because we assume that stock cannot be converted into cash within a period of 3 months. So this is the assumption that has been taken. So current assets mein I have covered you the current asset topic as well as the liquid assets. Please remember, liquid assets is very important whether you are reading financial management or accountancy. This is important. ठीक है? In financial management, liquid assets concept comes as liquidity ratio. ठीक है? It comes as liquidity ratio, तो आपको ये याद रखना है. Next is current liabilities. Now in current liabilities, there is no such concept of liquid liabilities, right? So there is just one concept of current liabilities, and it means what? All such liabilities which you need to pay within a year, like rent expenses, एक साल के अंदर ही पे करने होते हैं, ठीक है? Salary expenses, you have to pay within a year. Any other kind of outstanding expenses that you need to pay within a year, that will be categorized into your current liability. See, So current liabilities are those liabilities which are expected to be paid within a year, which are usually to be paid out of current assets. The examples of such liabilities are bank overdraft, bills payable, sundry creditors, short-term loans, outstanding expenses, etc., etc. Now, current liabilities, current assets, they are depicted in the financial statement, in the balance sheet. Now, related to it, one more concept is there called as working capital. This is the concept of working capital. Working capital means what? How it is calculated? It is calculated current assets minus current liabilities. This is how it is calculated. Okay? Current assets less current liabilities. See, whatever business you are doing, you should be having some cash in your pocket to run the business, right? So that is called as your working capital. Not exactly the cash, but some other assets as well. So, आपके पास कितनी current assets हैं which are sufficient to pay current liabilities, and even after paying current liabilities you will be having some assets with you, that is called as your working capital. ठीक है? Next is we have fixed assets. Now what is the meaning of fixed assets? Those assets which will be used in your business for a period more than 1 year. Such assets are called as the fixed assets. Very easy. Examples are land, building, plant and machinery, furniture and fixtures. They are taken in the balance sheet for a period of more than a year. So they are called as fixed assets. In the new format which has been prescribed for the company, they are also called as non-current assets. So they are also called as the non-current assets. So this is the other name which you should remember as well. Next is intangible assets. See, these are the assets which cannot be seen or touched, but obviously they have a presence, like goodwill, patent, trademarks. These are some of the examples of intangible assets. Your copyrights, correct? So all these are in case of rights. These are the legal rights which you have. For example, goodwill. Goodwill is, see, if you have operated in an area for a particular fairly long period of time, suppose WhatsApp, okay? Let's take the example of WhatsApp. So WhatsApp is a player, it is a dominant player, and I'll say that it has a monopoly in the texting business, right? In the social media instant messaging business. So whenever WhatsApp will sell itself to the others, WhatsApp will say that, see, this is our valuation. Now someone will ask, why your valuation is so high? आपकी assets तो सिर्फ 100 करोड़ की हैं and you are demanding a payment of 200 crores. Why? So WhatsApp will reply कि see, I know that my assets are for 100 crores, but my goodwill is way beyond than that. If you will take my brand, you will do a good business. So the brand name that you have created, that is called as your goodwill. Yes, it is valued. Okay? Whenever the valuation is done, whenever these mergers and acquisitions happen, the goodwill is valued and then it is recorded into the balance sheet. Next is investments. So these investments, they represent the funds which is invested in government securities, shares of companies, etc., etc. They are shown at the cost price in the balance sheet, right? Now suppose if, obviously you are showing the investments in cost price, but what if the market price falls down, right? For example, like in Adani case, that's what was happened. Suppose I was an investor in Adani and the market price of the Adani shares went down. So I will have to show this particular item in form of your footnote. Okay? After preparing the balance sheet, I will write it as a footnote that yes, market price of such investments have gone down. But please remember, you will record the investments into your balance sheet at cost price. There should be no confusion about it. Okay? कॉस्ट प्राइस पे ही रिकॉर्ड करना है. वन मोर थिंग, प्लीज डोंट कंसीडर दैट इन्वेस्टमेंट्स आर इंटेंजिबल असेट्स. नो, ठीक है. देयर आर documents where you can fee where you are having certificates, like, so this is not considered into that. Next is long term liabilities. Long term liabilities means the liabilities which needs to be paid out after an year. So such kind of liabilities like bank loans, loans from other financial institutions. In case of company, this also includes debentures, deposits. These are taken for a period more than an year, right? These are taken for a period of more than a year. That is why they are called as the long term liabilities. So all liabilities other than a current liability, they are called as long term liabilities. They are usually payable after an year. So hence, no, it is not what you can say, it is not a violation of money measurement concept. Let me tell you how. See, money measurement concept says that you have to record such transaction which can be measured in terms of money, right? So we have so many formulas for goodwill valuation. Goodwill can be measured in terms of money. So there are formulas on goodwill valuation, like it is valued on the basis of your profits, average profits. What are your average profits that you have earned over the years? On the basis of that, your goodwill is calculated. So yes, we can calculate goodwill in terms of money, and hence it is not a violation of money measurement concept. Money measurement concept is not restricting you, right? It is just saying that please record such transactions which have the monetary measurement. Now for suppose example, a manager is not behaving good. Can I measure it in terms of money? If I will say no, then money measurement concept says please do not record it. If I say yes, I can record it, because of his bad behavior my company has incurred this loss, so that loss will be recorded in the financial statements. ठीक है? Next is capital. So capital means what? The amount that has been brought in by the owner. ठीक है? So it is the excess of assets over liabilities due to outsiders. It represents the amount that has been originally contributed by the proprietor or the owner. ठीक? It is increased by profits. Obviously, suppose I am an owner of a business. I started the business by contributing 1 lakh rupees in capital. ठीक है? I brought this particular amount. With this particular amount, I purchased some assets. Okay? After that, in the whole year, I have earned 30,000 rupees profit. So whatever profit has been earned, that belongs to me as an owner, right? So my capital will increase by the amount of profit. At the same time, suppose in the year I have taken some amount for my personal expenses. So I will deduct it. Suppose I have withdrawn 10,000 rupees from my business bank account for paying the fees. So in that particular case, this is called as drawings. Drawings means any amount that you have withdrawn from your business for your personal expenses, personal individual expenses. ठीक है? So capital originally brought, it will be increased by the profit whatever you have earned during the year, and it will be decreased by the drawings. अगर आपने साल में कुछ भी पैसे निकाले हैं, if you have taken out any amount of money for your personal use, not business use, personal use, ठीक है? So you have to deduct it. Now next thing is drawings. So amount which is withdrawn by the proprietor is termed as the drawings and has the effect of reducing the balance on his capital account. So whenever any drawings are made, whenever amount is withdrawn for the personal expenses, that is called as the drawings. ठीक? Next is one word was there, so I included it. Word is called as marshalling. ठीक है? What does marshalling means? So arrangement of assets and liabilities in a particular order, it is called as the marshalling. So if you will see the schedule 3 of Companies Act, they have categorized the assets and liabilities in form of the duration. Non-current assets, current assets, non-current liabilities, current liabilities, right, as per the timing. There are so many different kinds of groupings on the basis of which you can categorize your assets and liabilities, that I can also categorize on the basis of liquidity, right? So there are so many things. So this is called as marshalling. In grouping, we put together the assets of similar nature together, like cash, bank, debtors, they are shown under the heading of current assets because they are of similar nature. Fine. And the balances of fixed assets and long-term investments, they are shown under the non-current assets. So this is the format. Now again, before looking into this particular format, I want to clarify that we have a new vertical balance sheet and P&L format, but that is applicable only onto company form of organization because that is provided under Companies Act 2013 Schedule 3. Part 1 में balance sheet, part 2 में आपका profit and loss account. ठीक है? So that is for companies. For proprietary firm and partnership firm, there is no specific format. They are preparing in this format only. So this is how your balance sheet is made. In the asset side, you can see cash in hand, bank account में कितना balance है, bills receivable, that is you yet to be received from customer, sundry debtors, provision for doubtful debt has been deducted. You guys have to tell me that why do we calculate provision for doubtful debts? On the basis of which concept provision for doubtful debts is calculated? This is the question that I am asking, and please reply me in the comment section. Next is closing stock. This is your inventory, investments, furniture, plant and machinery, land and building, goodwill. All of these are your assets and you have recorded in the assets column. In the liabilities column, any liability related to expenses, bills payable, sundry creditors has been recorded. Okay? In capital, you see, you brought in 1,80,000 as capital, withdrew 30,000 for your personal expenses, so that will be deducted, and any profit that you earn during the year will be added. Your capital figure is 2,42,600 after these adjustments, and this is your final balance sheet total. Yes. What is this principle also called as? What is this principle of conservatism also called as? So provision for doubtful debts is calculated by the virtue of principle of conservatism, also known as prudence. ठीक है? Concept of prudence. Prudence or conservatism, they are one and the same thing. So please remember all of this. One more thing. Whatever you record over here, your assets, they are always recorded at the cost price, except the inventory. So your closing stock is valued at cost price or market price, whichever is lower. Why it is done like that? Again, the principle of conservatism or prudence. Your closing stock is recorded at cost price or market price, whichever is lower. Why? Because the principle of conservatism says, suppose I have my inventory and cost price of my inventory is 10,000. But in the market, the price of inventory has gone down. It has now valued at 7,000 in the market. So this is a loss, right? I might incur this particular loss. So that is why principle of conservatism or prudence says that you have to record all your expected losses. Okay? So that is why I record my inventory at cost price or market price, whichever is lower, as per the accounting standard 2 valuation of inventories. Okay? बाकी की सारी assets are recorded at the cost price, not at market price. For investments also we read that if market price of investments decrease, in that particular case आपकी बैलेंस शीट के नीचे ऐसे फुट नोट्स आते हैं, right? In those notes, please write that the market value of such investments has gone down. So this is what I wanted to discuss in the balance sheet. We have completed trading and P&L. We have completed balance sheet. If you guys have any sort of doubt, all of your doubts are welcome in the comment section. Please write it. I will try to reply to them. Okay. So thank you so much. Please do not forget to like this video. And if you did like this lecture, any kinds of doubt of yours are welcome in the comment section. Thank you.